Welcome to the Capital News. I am your host, Alex Karitis. Today is August 12th, 2020. Thank you so much for joining me. The title of today's podcast, Inflation on Its Way. We have some data released from the Bureau of Labor Statistics this morning discussing inflation. So we're going to read part of that report and a brief excerpt of a Reuters article that covers the same topic. Some market performance. Joe Biden and his VP selection, Senator Kamala Harris from the state of California, gave their first public appearance together in the state of Delaware. So we're going to provide a little bit of analysis on their statements today. We covered that announcement yesterday, but there was also a big down day yesterday in the precious metal space. Gold and silver got shellacked. Huge down day. And that might have been off of the back of, I don't know, is it the Russian vaccine for COVID-19? Is all of a sudden, is the world finally finding Vladimir Putin and the Russians credible? Is this just headline noise? I mean, let's just cram through at Operation Warp Speed any type of vaccine that's only going to have maybe 50, 60% efficacy. I mean, does this sound like a recipe for disaster or what? I don't trust our government to rush this thing through. You think I'm going to trust the Russians? Give me a break. But the markets don't care. They're in la-la land. They're all on crack. They don't care. Anything to juice and prime the markets, anything to give them an excuse to rocket higher, they're going to take it and they're going to run with it. Bad news, fantastic. Horrendous news, even better. Stimulus talks at a standstill, rally. Not going to happen, keep going up. We're going to have some more spending, some more stimulus, keep going up. You can't make this stuff up. This is insane. Now, we're going to get to the inflation numbers. You would think, with expectations being beaten, which is not a good thing because it means inflation is already here, which is no surprise to this audience, and it's only going to get worse. Make no mistake about it. That investors, instead of selling their gold and silver, would be looking to buy it. Now, I think net they will continue. Nothing goes straight up, and we have seen some massive rallies in both gold and silver over the past few weeks. So to see this type of pullback is somewhat shocking, though, to the degree. Because silver got shellacked. I mean, you're talking 12, 15% decline. Had that happened in the stock market, can you imagine the shouting from the rooftops on Bloomberg and Fox Business and CNBC? I bet we'd have a spending bill passed already if that was the case. But no, it's gold and silver that got shellacked. We don't have to worry about it. The real assets, the real money, which has stood the test of time for millennia. But that's an opportunity, folks. You buy low, you sell high. This is a long-term bull market for precious metals. Government after government, central bank after central bank is in an all-out race to destroy their fiat currencies. Now, they're not going to tell you that, but that's exactly what they're doing. So you can stick with the paper assets if you want to, if you want to call them an asset anymore, or you can get the stuff that has been around for millennia. Gold and silver. Check it out. Nonetheless, gold and silver spot prices are both trading up right now. We have gold at $1,931 an ounce, silver at $25.77. And of course, despite the massive pullback, especially in silver, again, it's trading around $26 an ounce. You have to recall, only a handful of months ago, when the market sold off back in March, silver was down at $12, so it has more than doubled. So this is still a huge move. And we ain't seen nothing yet. We are in the very, very early stages, the very, very early innings of this long-term bull market in the precious metal space. Because more spending is going to occur. There is not going to be any cutting of government spending. We know this. It's just a question of how much more are they going to tack on. We know the Federal Reserve and other central banks are out of control. They're accountable to no one. So they're going to do what they do, which is print money, which is inflation. The effects of inflation take time to make their way through the system. It moves in an asymmetric manner, differing speeds, differing degrees. But don't worry, it's coming. And we're going to talk about some of that report. Now, the markets today took off. I mean, there was a down day yesterday, which is, that must have been a glitch in the matrix. So they had to make up for it today. You got a glitch in the matrix yesterday, aren't allowed to go down, but somehow they did, thus the glitch in the matrix. Now they were off to the races today, especially the NASDAQ. And of course, a lot of this may be because the Russians have come up with a vaccine. Maybe it's because the markets aren't buying this good cop, bad cop disagreement between Nancy Pelosi and Steven Mnuchin for more stimulus. They know it's coming. Because if it doesn't come from them, it's going to come directly from the Fed. And of course, it's going to be financed by the Federal Reserve anyway. And any losses that occur are going to be backstopped by you and me, the taxpayer. Who signed up for this deal? Oh, I know. Congress and the White House did. 96-0, no votes for America. Sign it into law with a smile on his face. But I'm going to go vote in a couple months. I'm going to get my little sticker that said I voted because I think I'm making a difference here. Give me a break. The two-party system is a scam. It's a con job. They are one in the same. They just tell you what you want to hear, so you go into the ballot box and you pull the lever, cast your vote, and get your sticker. That's all it is. You got to wake up to this. Otherwise, you're going to end up in the same place. We'll be here having the same discussion another 2, 4, 6, 8 years from now. And that's exactly what's going to happen. That's exactly what's going to happen, unfortunately. Dollar index, 93.28. Right now we got the euro back above $1.18 to the U.S. dollar. The British pound is up $1.30 to the U.S. dollar. Let's look at some of the overnight trading right now. Dow Jones Industrial Average and the S&P 500 flat. NASDAQ 100 is down about 0.25%. Japanese cash trade is up 2%. Across the pond in Europe, a sea of green, up 2% over there on the FTSE exchange, over there in London. And why not? Because data came out there for the British economy. They're in a huge recession, so it makes sense that they would be up today on their stock market, up 2%. Australia cash trade right now, however, is down about 0.7%. This is on the news of a over 20-year high on their unemployment figures. No surprise there. And again, getting back to the huge move today in the NASDAQ, could be off of the back of an astronomical move of gaining 13% for the day alone. And of course, that's Tesla. And you have the announcement of a 5-for-1 stock split. And I don't think a lot of investors, especially these people who are just jumping in because they can't bet on sports to the same degree that they used to, they got all of this free money from the government. Well, let's put it somewhere. These Robin Hood traders, if you will, they have no understanding of a balance sheet, cash flow, valuations. 5-for-1 split. Does that mean if I put $10,000, I'm going to have $50,000? No, genius. That's not what it means, but I think that's what people actually think because they don't know what's going on here. You are going to have the same amount of money in your account. This is not a gift from Tesla. This is not going to just increase your wealth by 5 times. It's not how that works. But who cares? Who cares? Why should anybody care? On the commodity front, we have WTI trading at $42.60 a barrel, Brent at $45.34, natural gas at $2.17. Another thing that you should be paying attention to on the commodity front, huge moves in the price of lumber. A lot of shortages with lumber, especially treated lumber, backlog of the chemical that is needed to treat it. I mean, you're talking, I think it's over $700. Yes, it is. $706 per 1,000 board feet. $706. Astronomical. Look at a chart, because at its previous high, the beginning of this year, it was slightly north of 450. It plummeted back below 300 when the market sold off, and now it is over $700. This is astronomical. So this is just another case in point of your supply disruptions, your shortages, in conjunction with a weakening dollar or inflation. This is a recipe for disaster. At this juncture, there is no stopping it. There's no stopping it. There aren't any politicians, there aren't any leaders anywhere who are calling a quits. Okay, stop, time out, can't do this anymore. Nope, it's put the pedal to the metal. Nancy Pelosi and Steven Mnuchin in the White House, they can have their fun. They can have their political theater. That's all it is. That's all it is. Because something's going to come down the pike. Whether it's an agreement that is legislated legally and constitutionally by Congress and signed into law by the president, or if the president unconstitutionally makes something up with an executive order. More funny money is going to make its way through the system. It's just a question of how, to what degree, and when. But it is coming. This is going to be a continuation of inflationary pressures. On the bond front, Uncle Sam's 10-year junk note yielding 0.66%. So quite the move. Perhaps this too is off the back of this inflation data coming in hotter than expected. And again, we're going to get to that here shortly. But first, I want to cover the statements this afternoon made by Joe Biden and Kamala Harris. Again, I don't like them. I'm not voting for them. If both of them can stick to the script, if they can both become teleprompter candidates, very much so like Barack Obama was, they got a good chance of winning. There is plenty of material out there to attack Donald Trump on. Just a plethora of information. I mean, I could probably become a very wealthy individual if I were to become a Democratic Party strategist. Because I could just feed them data and information, a lot of the things that we talk about here on a daily basis, and lay them at the feet of Donald Trump. Some of them are his fault, some of them aren't. But guess what? This is politics, folks. Who cares about the truth? That's what I'm saying. You put that hat on, you can go to town. Because what these two said today, they stuck to the script. And they tore him down. They made good points. They can convince a lot of people. Now, I think that Joe Biden is likely going to win the popular vote. That's almost a guarantee. But I don't like to count my chickens before they hatch. This is the year 2020. We got a few short months to go, but that's an eternity this year. Anything could happen. So there could be some earth-shattering news. That's possible. And maybe Trump will win the popular vote and the Electoral College. But as it stands today, I think at a minimum, Joe Biden will win the popular vote. The question is, will he win the Electoral College? We discussed that briefly yesterday. This, more than anything, in my opinion, is a referendum on Donald Trump. Do the American people want to give Donald Trump another 4 years in the White House, or don't they? All of those people who said, you know what, I'm going to cross the line. I don't want Hillary Clinton. She represents the status quo. The status quo is not working. Let's give this guy a chance. Are those people in Pennsylvania, in Wisconsin, and Michigan, and others, are they going to cross the line again for Donald Trump? As it stands today, I don't think a lot of them are going to. Definitely not 100% of them. So is it going to be enough, however, to still get him over the finish line to win the Electoral College again and to get another 4 years in office? Well, obviously, we don't know, but we're going to find out in a few short months. But there is plenty to attack this president on. Again, some of it is his fault, some of it isn't. But this is politics, and they're going to attack each other. I mean, they want to state today, as they did, that under the Obama-Biden administration, we had one of the longest economic expansions in U.S. history. That's a fact. That's a fact. And it continued under Trump-Pence. At the expense of trillion-dollar deficits, by the way, before COVID-19. So cost-benefit, not so good, Jack. Not so good. But what they failed to leave out, of course, not only was it, yes, the longest expansion, but it was also the weakest. Because had it been stronger, Hillary Clinton would probably be president right now. I didn't want that. I don't want her there. But the American people understood that this was not a robust, all-inclusive economic recovery. And they said, we're going to give this guy, Donald Trump, a chance. Because you can come up with a whole bunch of dirt on Joe Biden, on Kamala Harris, and I'm sure they're going to, but is it going to stick? Does anybody really care at this juncture? Because what is their dirty laundry up against Donald Trump's? Now, I don't know if that's going to be the case, if they too are going to be like Teflon Don as well, but we're going to find out in the not-too-distant future here, because we only got a few months to go. And there's clearly a lot of dirty laundry for everybody. But is that what the nation is going to focus on? Is that what the average voter is going to give the most weight to? I think not. I think not. Now, is it possible that there could be a lot of people who actually believe in the message that, obviously they're going to put together, Biden and Harris? Build back better, expand on Obamacare, climate change, yada, 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 whatever the case. Yes, there are people who are going to actually believe in Joe Biden, whatever his vision, whatever his message he's putting out there. But at the end of the day, I think it's more so a referendum on Donald Trump. You want to give him another 4 years, or do you regret your decision that you gave him a chance? And you're not going to vote for him. Now, maybe you're not going to go out and vote for Biden either. But you're not going to be a vote for Trump. And Trump needs as many votes as possible. Because he's most likely not going to win the popular vote, but he could still pull it out on the Electoral College, but he needs to get that turnout. Very interesting as we progress here over the next couple of months. I'll bring up an Electoral College map. I'll look at the states that I think are in contention. We'll do some of the math, do some simulations, basically, to see what could play out. And if it's going to potentially be a landslide or if it's going to be a neck and neck race to the end. But I want to give it some time because it's an eternity. It's a lifetime between now and Election Day. So I want to get a little more news, allow Kamala and Joe Biden to put out their message, see how it resonates, get a better feel for it, try to get their chemistry, see if things make sense before I get into all of the Electoral College business. But we'll get to it. Make no mistake about it. Now on to the Consumer Price Index summary from the Bureau of Labor Statistics for July 2020. The Consumer Price Index for all urban consumers, the CPIU, increased 0.6% in July on a seasonally adjusted basis, the same increase as in June, the U.S. Bureau of Labor Statistics reported today. Over the last 12 months, the all-item index increased 1% before seasonal adjustment. The gasoline index continued to rise in July after increasing sharply in June and accounted for about 1/4 of the monthly increase in the seasonally adjusted all-items index. The energy index increased 2.5% in July as the gasoline index rose 5.6%. This was partially offset by the food index, which decreased 0.4% in the month of July, with the index for food at home declining 1.1%. The index for all items, less food and energy, rose 0.6% in July, its largest increase since January of 1991. The index for motor vehicle insurance increased sharply in July as it did in the previous month. There's nobody on the road, so it makes perfectly sense for your insurance premiums to go up. The indexes for shelter, communication, used cars, and trucks and medical care also increased in July, while the index for recreation declined. The all items index increased 1% for the 12 months ending July, a larger increase than the 0.6 rise for the period ending in June. The index for all items, less food and energy, increased 1.6% over the last 12 months. The food index increased 4.1% over the last 12 months, with the index for food at home rising 4.6%. Despite increasing in July, the energy index fell 11.2% over the last 12 months. So there you have it, folks. Not too pretty, is it? But of course, your government, your central bank, Federal Reserve would have you believe that there is no inflation, that it's not on the horizon, that it's not coming, that it's not going to be a threat. And in fact, they want it. Federal Reserve's target is at 2%. And of course, they are more than happy, as the chairman has said repeatedly for the past several months, that they are perfectly fine allowing inflation to run a little hot, because that'll just mean it's symmetrical around their 2% figure, because for so long they haven't been able to generate 2%. So we'll allow it to balance itself out, and if we have to tolerate 3, 4, 5% inflation, we'll do it. We'll do it. How do you feel about that with all of your prices going up 3, 4, 5%? Is your income going up 3, 4, 5%? I don't think so. You're lucky if you have a job. 31 million Americans continuing to claim and to get some sort of unemployment benefit. And of course, the number's worse than that, because you got a lot of people who have given up work and might not even qualify for some of these programs. And again, a lot of this stuff is just a delay. The PPP loans, these are massive layoffs waiting in the wings because there is no demand for these services, and yet prices still go up. I wonder why that is. Could it be the massive amount of money printing? Yeah, that's exactly why it is, in conjunction with a lot of the supply shortages, which are not going to be alleviated anytime soon. The Reuters article, economists polled by Reuters had forecast the CPI would rise 0.3% in July and the core CPI would gain 0.2%. Man, they were way off. I don't know what economists they're calling. Maybe Reuters should give me a call. Or these economists should call the Capital News and get my input, because these jokers don't know what's coming. You also have this that Reuters is saying. The higher prices further dispel fears of deflation, a decline in the general price level. That too is also wrong. Deflation is a contraction of the money supply, just like inflation is an expansion in the money supply. That is harmful during a recession. Again, Reuters is claiming that deflation is harmful during a recession as consumers and businesses may delay purchases in anticipation of lower prices. This is ridiculous. This is ridiculous. If you have lost your job or are afraid that you're going to lose your job and the economy is in recession, how is higher prices going to benefit you? It's not. Lower prices will benefit you. When you go shopping, do you go looking for the most expensive items on the shelf? Or do you go looking for a sale? Again, folks, this is a myth. This is a joke that the media puts out there, that the government and central banks put out there, that deflation is dangerous. That would be part of the cure. You need to save money. You're trying to pinch every penny you have. You want lower prices, not higher prices. And again, the only people, the only institutions that are going to be pushing for inflation are governments and central bank. And that should be all you need to know to understand that it's not a good thing. Because as they say here, the belief The higher prices further dispel fears of deflation, a decline in the general price level that is harmful during a recession as consumers and businesses may delay purchases in anticipation of lower prices. In anticipation of lower prices. Well, wouldn't the opposite then be true with inflation? That everybody's going to rush out now to go buy today in anticipation that prices are going to be even higher tomorrow? That's not how it works. You have spending habits for a reason. It's because you go shopping when you need something. You go to the grocery store when you need more food. You're not stocking up on everything all of the time. This is just a myth that is thrown out there because it is to the benefit of the government and central bankers to have you believe that lower prices are a bad thing. Because how are higher prices going to even benefit businesses? You say, oh, well, they're charging a higher price. Yeah, but are they getting it? You can charge a higher price. That doesn't mean the customer is going to come in and buy it. That's the law of demand. Higher price, lower demand. Lower quantity demanded. Lower price, higher quantity demanded. Yet these idiots in government and central banks would have you believe the other way around. Don't fall for it. Please, do not fall for it. So make no mistake about it, folks. Inflation is rearing its ugly little head. Stagflation will be here, if it isn't already. And it's just a question as to whether or not all of this turns into hyperinflation here in the United States. It's a possibility as far as I'm concerned. This will take a while. It's a process. But that hyperinflation can also be exported, if you will, because inflation doesn't understand boundaries or borders, doesn't care. And we have been witnessing hyperinflation in other countries around the world. One of the main reasons why so many countries are protesting, because they are all dealing with higher costs, higher taxes, corrupt and incompetent governments. People are sick and tired of being sick and tired. Do you get it? None of these protests are just political. None of these protests are just economic. None of these protests are just social, no matter what anybody tells you. It's a combination of all the above. There's corruption everywhere. There are social issues everywhere. The world is in a global depression, make no mistake about it. They are just doing their damnedest to kick this can as far down the road as humanly possible. Which, in their actions of doing so, is just making the problem that much worse. Yet they can float out a headline that there's a vaccine, that they're going to do more stimulus, that they're not, and the markets keep rallying higher. Until they don't, because again, this is highly reminiscent of the massive rally that was witnessed following the stock market crash in 1929, where you had about a 6-month rally before it then, the Dow Jones, then collapsed 90% over the coming years. It's not a pretty picture, is it? Not at all. And history may not repeat, but it does rhyme. And we bottomed back in June. So we're getting pretty close to a 6-month rally here in the stock market, based off of nothing but BS headlines and deteriorating economic fundamentals. Inflation is on its way, folks. It's already here, and you know it. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.